Joe.
Hey, Senor Brad. ¿Cómo
Hello,
estás?
Newman.
Kramer.
Norm.
Ah, God, bro, I'll pull out another 80s show. I can't think of one. Well, Friends was after that, right?
Friends and Norm and you know what I was listening to the other day? I don't know why the hell it was on some podcast. Oh, I know it was an interview. It was an interview with one of the cast of MASH. And they were talking about the fact that God, I can't remember what it was. Anyway, they were talking about the cast. They were talking about the fact that that during the final episode of that show, when the most watched episode of television ever, when they were filming it, they had set up a camp, and not once during the show did they ever talk about things like napalm, right, and that kind of shit. And so the final episode, they had set up this set, and it was next to some forest, and a fire wiped out their set overnight. So they added into the episode that a napalm strike had taken out and a fire from a napalm strike had taken out the camp, the regular camp. So they had to add it in. Anyway, it was just interesting them talking about the fact that they never talked about that. And then how they had to adjust the script for the last episode to have the camp be burned down.
Yeah, I always hate those last episode things. I mean, like the Seinfeld one.
I don't even remember the Seinfeld one.
It was like, wasn't it a big recap of everything for like
when they're no stuck idea. I'm not even sure I ever saw the last Seinfeld.
I think they're stuck in some small New England jail for being obnoxious New York assholes or something like that, and it just recaps everything. I thought it was a two-parter, I think. But when you were saying the MASH thing, it reminded me. I just watched the original MASH movie a week ago again.
Oh, really?
Oh, it's just hysterical. But it's funny when you look at it, and well, of course, the amount of drinking that goes on, which you never see now. But just they're playing that football game, and they're all bringing in their ringer athletes.
Oh yeah,
all the African American guys, and the guy they're bringing in's name is Spear Chucker Jones or something like that. And they're saying this shit like and it's like nobody cares. And you think about like today, you just look at how much racism, I guess, was built into everything in the past, and nobody even really noticed it. I guess. I'm sure the African Americans noticed it.
They noticed it. Yeah, of course.
But none of us really noticed it.
Yeah, well, it was kind of normalized. Look, it's like my grandmother, sweetest as sweet as could be, but raised in fucking rural Texas when she was a kid, and she was just the sweetest thing. And I didn't know until I was a teenager and would hang out with her as she was getting really old, what a hard ass racist she was. And I was like, holy shit. I turned to my parents. I was like, what the hell is wrong with this woman? Like, and I was in my full on political rebellion years. And it was like, what the fuck? My grandmother, who I have loved and adored forever, is a full on racist. Just crazy, just nuts.
Well, they're just that generation was just trained to be that way.
Yeah.
Not consciously trained, but just society trained them that way.
Yeah.
I had the same with some of my relatives too. It was like, and then you realize that, there were like no shows on TV that had any like, African Americans in leading roles, let alone, Latinos. Until like, I think it was the I Spy show with Bill Cosby in the 60s.
Wow.
It was the very first one where you had a African American in a main role in a primetime show. Right. And, so then you kind of go, why do people freak out so much about like, the visual cues on that? I might talk about this a little bit too sometimes, about how if you don't see people of color all the time, your brain just all of a sudden it's like pattern recognition. It's like, it does not fit. What's going on? And and I'm just glad, I grew up in the military, so I grew up with everybody. And, we used to brawl and fight and, say bad words to each other, but we were all buddies afterwards. So it was it wasn't taught. But if you don't have exposure, then, you're naturally, and I'm saying this for everybody. I'm not just saying it for the country boys. I'm saying it for, the inner city neighborhoods too, that if you don't see people, it scares you, because all you see is the the negative stuff in media or wherever.
Right.
So more hanging out with people that aren't like you is always the best course.
Absolutely.
So what are we talking about today?
You're gonna load up some news while I'm pulling mine up.
Okay. So I got something on an article that's kind of interesting. Let's see if I can remember it all. But saying that Elon Musk probably won't buy Twitter.
He's not going to be able to because he's losing too much money on Tesla.
Well, that's what they're kind of saying is the breakup fee is like nothing. I mean, I think the Morgan Stanley breakup fee is $1 billion. And they're like, as soon as he dumps this deal, he's probably going to make 50 billion on Tesla stock appreciation. Right. So you guys can see it. Okay. So, oh shit. Paywall's locked now. God damn it. Darn it. I had the cookies all white, but it basically goes through all the, it's on, oh, it's Reuters. Yeah, frig. I had maxed this one out earlier today. Let me switch over to Chrome on this one quick. See if I can capture it. Let's see what's here. Just one. Okay, yeah, so we're in pretty good shape here.
So I had about 1,300 OP tokens due to me across couple of wallets.
What, the optimism stuff?
Yeah.
Oh, nice.
Yeah. Yeah, but now I got to fucking move shit back over to Ethereum and pay the fees. I don't know what this shit's going to be worth. I don't know. Is there a time limit on claiming those airdrops?
I think it's a couple of months before it even happens, dude, to be honest.
Okay.
Okay, hold on.
now yours.
You could see this clean, right?
Yeah.
Okay, good. Because I had to pull Chrome over to the other monitor. So this is all about why he wouldn't buy it now. And they're talking about a couple of things, like when he went after See's Candies, which was Warren Buffett's thing.
He did?
Yeah, and then he changed his mind. They're saying it wouldn't be.
Elon Musk tried to buy See's Candies?
Yeah, right here. 4 years ago. So he he vowed to set up a peanut brittle company, to take on Warren Buffett's See's Candies. So he wanted to go ahead to have a Buffett, and he changed his mind. So they're saying he might change his mind here. And it talks about, the breakup fee is $1 billion that he or Twitter would have to pay if they renege on the contract. And Twitter's lawyers even wedged in a so-called specific performance clause, which could theoretically force Musk to buy the company if he threatens to back out. Though in practice, these are usually settled by adding to the breakup fee. And they're saying about, the Tesla stock's fallen around 20% since he first revealed the first stake he bought in Twitter.
Right.
Partly because he may need to sell shares to fund it. And he's saying if Tesla stock bounces back, likely if the Twitter deal falls away, the 40 billion of recouped wealth will more than make up for the breakup fee. And then they talk about the China stuff, which I was mentioning the other day. Tesla produces half their vehicles there, generates a quarter of its revenue. But Twitter is no friend to the People's Republic of China because it's defied Beijing and a bunch of shit, particularly the Hong Kong protests. So China could easily hold Tesla ransom if Musk didn't make Twitter play ball with the Chinese.
Right.
And that's
what somebody was tweeting the other day. Like, what's going to happen the first time the free speech mandate's in place and China wants something deleted?
Yeah, exactly. And then they're going to be, basically, I've seen what they did to so many other companies there. It's not a stretch for the Chinese to start up another company called Tesla or something like that, change one letter and take all the IP that they make them give, all these deals and start up their own thing. I saw it with Danone yogurt. There was like Danone, and we were driving around and seeing all these like heavy equipment lots filled up with Caterpillar looking gear, but it wasn't Caterpillar. And then the other one, big Cummins diesel, I remember a deal there where, Cummins basically, they basically stole the latest generation of diesel engines. This is like 5 or 6 years ago from Cummins by just making their own. So they basically get in JVs, take all the IP, start up a Chinese company with the same thing, and there's nothing you can do.
Right.
So basically they're saying here, it's saying his absolutism probably won't survive a Twitter deal anyhow. European Union commissioner told the Financial Times the company must police illegal or harmful content or risk being banned. So in the United States, where regulators are less aggressive, other tech firms could effectively create the same threat. Apple, for example, gets to decide which apps appear in its app store. Other things make it easier for Musk to walk away. One thing makes it easier for Musk to walk away before any of this becomes a problem. The market partly anticipates it already. Twitter stock is currently trading. This is from yesterday, so I don't know if this is accurate at this moment. 11% below his offer price, a fairly wide spread for a deal with little antitrust pushback. His tweets criticizing some actions, potentially flouting the merger agreement, already suggest he might be starting to lose interest.
It's currently at $49.
Yeah, most likely Musk's attention will wander elsewhere. It wouldn't be the first time. So I thought that was kind of interesting. I mean, from a rational, where am I supposed to be? From a rational standpoint, it just doesn't make sense to do the deal. I mean, from an economic standpoint.
Right.
From an ego standpoint, yeah, sure it does.
Sure.
So then I thought this was interesting. Since, they're pushing that bill through the House to, basically sell all the yachts that they're seizing and all the assets and just give it all straight to Ukraine. So interesting. 4 Republicans and 4 Democrats voted no for the bill.
Oh.
Well, who do you think they were?
I don't know.
It's basically the squad, and then all here it is right here.
Of course.
Bush,
and all the ones who went to Russia on July 4th last year?
I don't know, but Madison Cawthorn, who we know that guy from North Carolina.
Oh, he's totally in the pocket.
Marjorie Taylor Greene.
Yeah, well, there you go.
Thomas Massey and Chip Roy. So it's, again, that circular thing that I talk about a lot that hold on, I'm on the wrong window. Okay, so just want to see what I look like. Where it's a circle. It's not left, right. Extremes of left and right always meet at the bottom.
Come around.
Here.
Yeah.
And so, which I'm like, why would AOC oppose this bill? Why would Ilhan Omar and Tlaib oppose the bill? It doesn't make any sense to me. So unless it's just they're trying to say it's an anti-war stance or something. I mean, it's just stupid. But I thought you'd get a kick out of that.
I totally cracks me up. Look, I mean, there are a lot of politicians, without, throwing shade. There are a number of politicians and commentators out there who are in the back pocket of Russia. And, and there was some testimony happening. Okay, let's get off that.
Yeah, but I thought it was interesting just to see where it goes. You got something now? I could go.
No, I was going to tell you real quick. Bitcoin's at 39,380, but there was a 3% spike this morning. 3.17% spike from about 38,897 up to 40,200. So, it's interesting the way we keep popping around in here.
Well, somebody came in and bought, some groups or whatever, bought 4,000 in 15 minutes at, looks like 11 o'clock. So, and then right before that, it looks like another 1,000. So it looks like a 5,000 unit buy by somebody. But then,
that's when the spike happened.
And so you see right here, then of course, people just dumped back down to 39 almost. And now it's back up. So
maybe that's our pal Do Kwon buying some more.
Yeah, but I like it. I want to see action like this.
Yeah.
So basically it runs up, and anybody who wanted to sell, I think I also saw it, maybe it was in the Material Indicators channel. It was either that or Jarvis or Kingfisher. I can't remember. But that max pain point was, I think, 40,000. So, most of the liquidity is stacked on right near that point, both short and long. Short and long.
Right.
So it makes sense that someone would be making liquidity grabs there.
Right.
But that's some heavyweight action. Now this is just Binance too that I'm looking at here. So who knows what happened over in, Coinbase and Gemini and places like that. There must have been more. But people took the opportunity to sell if they wanted to sell.
Yep.
And then you see right here, when it dipped down back to 39.56, people took the opportunity to buy because that wick is a pretty long wick right there.
Damn right.
And it drove it right back up within that 15-minute window. But let me just go ahead and look at it 5 minutes, see what that looks like. It might give more. Yeah, so here's a little more detailed. So look, this was some steady buying in that period. Yeah. Somebody trying to hide here, but then all of a sudden they said,
fuck it. I don't feel like doing this.
Yeah, and then here we see okay, everybody's like, well, where is it? Where is it? But lots of, volatility in that 5-minute candle from 39-ish to, 39.6, it looks like. And then here we're running like 39.5 to 39.3. So, pretty big swings in short time frames, which tells me that, hopefully the, people who wanted to sold could get out and people that wanted to buy could get in.
Yeah.
But the fact that there's this buying here, again, just Binance numbers, is actually pretty encouraging.
Let's hope so. Let's hope it's encouraging.
So go ahead.
No, go ahead.
No, I was just going to talk about ETH. Well, this wasn't the chart I wanted. There was a good chart in Jarvis about, was it this one? About liquidity. Oh, wow. Bloomberg. New mortgage products let Bitcoin hodlers use their BTC as a security for loans. What is this?
Huh.
Yeah, I'm going to go down the rat hole here for a second. Thorchain? Oh, that's another one. Bitcoin-backed mortgages really need to cash out. I don't know who it is. That's what I'm trying to figure out who's doing it. I mean, I've heard about this before. Who was the one we were talking about a couple weeks ago? Wasn't there somebody doing this already?
Doing what? But yeah, we talked about a company doing the Bitcoin-backed mortgages.
Yeah, it might be
Look,
that.
They're just borrowing against their holdings. It's like a collateralized loan.
Yeah, but what is the LTV? Friday, 100% mortgage LTV, which they don't do anymore. So BTC is deposit down payment, maybe 10 to 20% or more, I guess. Yeah, whatever. So something exciting going on, but you know, I'm good. What you got? I'll go find some more.
I got some stuff. Hold on. All right. So there is a, I'm excited about this because this could solve a problem that I have with one of my companies. New project coming out. It's not launched yet, called Rain, but it is a smart play. I mean, really friggin' smart play on their part. So it is a corporate card for Web3 treasuries, right? So it doesn't require you to put it on a centralized exchange. It allows you currently, the first version that they're launching, the early access version, allows you to use the card against any USDC that you have in your wallet, right? So it doesn't have to be on Binance. It doesn't have to be anywhere else. It's just, you can have a chunk of USDC in your wallet and be able to use this debit card to pay for things, which is phenomenal, right? Like you're now able to tap into the funds you have in crypto without having to transfer them to centralized exchange and wire them out to a bank account. And as a treasury or a DAO, you know, if you're a true DAO, you're not a registered entity somewhere or whatever, you getting a bank account is going to be a just massive nightmare for you. But you still have to pay for things. You have to pay for hosting. You have to pay for domains. You have to pay other people, attorneys, whatever, outside of your entity that may not accept payments in crypto. So to me, this is a really this is a brilliant play. And they say within the documentation in their Medium post, I looked at their Medium post as well about it. They say that they're actually going to start adding all kinds of other like neobank features, right? So there'll be the ability to do wire transfers. There'll be the ability to deposits, et cetera, et cetera. So I'm excited about this because I deal with this hassle of sending funds internationally. But I receive funds for a company into a bank account for Stripe, but Bank of America doesn't want to allow us to open a bank account for this other company because it's crypto related. And so they won't allow us to open an account. Most of the other major US banks won't let us open an account. So we're like having to channel money through to another account in order to pay people internationally that don't take crypto. And so that's obviously problematic from an accounting perspective, everything else. This would be a huge solution for us. So anyway, I'm excited about this. It's raincards.xyz. If anybody wants to check it out, raincards.xyz. So Joe, I don't know if you read Arthur Hayes' most recent monolithic piece, but it's titled The Doom Loop. And he's basically saying, basically, he starts off talking about how fucked the US is, but then goes into how fucked China is, and how fucked Russia is, and how fucked basically the entire globe is in terms of each of these major countries' financial situation. So, for example, he talked about China being in this massive, having massive amounts of euros and USD on the books, and not having any way to liquidate it. Now, the premise of his entire thing is that sovereign states are now freaked out because the West was able to seize all of Russia's financial assets, right? And so his argument is that China is sitting there going, well, fuck, we can't invade. He doesn't say this. I'm saying this. We can't invade Taiwan because the Americans and the West will seize all of our money and block us out of the financial system. So it's turned out to be quite the nuclear weapon. So what his theory for Russia and China is that they will have no choice but to go to gold or Bitcoin, right? And he runs through all the arguments of other commodities that they can't do. It's too difficult, etc. He pulls in El Salvador as an example, but this guy, holy shit, the stuff that this guy sits around and thinks about, the interweaving of the information knowledge that he has is truly astounding. But his argument in this entire thing is that all of this equals $1 million per Bitcoin. And that at the end of all these doom loops for each of these countries, that it's going to have a massive impact financially on things. There's going to be starvation around the world. It's very doom and gloom, but also that China is going to be forced into Bitcoin because they have no way to unload all the USD and euro that makes them vulnerable to us sanctioning them, which is a really interesting theory and certainly makes sense, right? It's like, anyway, a lot more detail in this piece. Highly recommend it. It's called The Doom Loop. It's Arthur Hayes. So you can just look at cryptohayes.medium.com to find the piece. But this is like, I learned so much reading this. This guy is frigging brilliant. And he makes the case that China can't buy enough gold with the money they have. They would have to corner the entire gold market and still couldn't unload most of what they have in USD and euros. So
wasn't the gold market 10 trillion?
He says he shows the gold producing countries, right? And then he shows the surplus that China has. So if you take all of the top 10 gold producing countries and you bought everything that they're outputting currently or that's available in the market, that would only cover 35.2% of China's overall surplus in USD and euros.
How much does he say that they're holding?
Let me go up here and find it.
Trying to find it in the article too.
Anyway, it's just a fascinating article because there's so much here that I don't ever think about or know about. China was holding in January 1 trillion of its 3 trillion in foreign reserves in U.S. Treasuries. So 1 trillion.
Yeah. And gold market's 10 trillion. Okay.
Yeah.
So,
but he's not saying, he's saying what they could buy, like, what's being produced, what's available to buy on the market. And it's impossible because they could never buy everything that's there. And at the same time, the bigger problem is they can't allow it to be custodied in the United States where most of the gold is custodied, right? Where the exchanges here just make a database update when a sale transaction happens because it's all stored in their facilities. They would have to get it shipped to China. So how do you get $1 trillion worth of gold shipped to China? Right. I mean, it's a logistical fucking nightmare. It's impossible.
Yeah. The thing is that, Chinese and Indians, India and Indians don't talk about it. They're very, in Asia, Southeast Asians, everybody, very big on the gold. They wear it as jewelry because it's portable wealth.
Right.
So that's, how you store wealth and keep it out of, the hands of banks, et cetera. My read on, of course, I want them to go into Bitcoin more to drive the price up. But look, if you can sanction deposits and seize them, you don't think they're tracking wallets, Bitcoin wallets too?
What his argument is that two things. Number one, they could buy up Bitcoin, but they can't stop them from buying the Bitcoin, right? Like there's no way for them to seize their wallets if they have the Bitcoin in their wallets. But the other thing he said is he thinks that China will reverse course on mining and throw all of their excess energy at mining. And then that allows them to corner the market, but also has the potential to make Bitcoin entirely centralized. But his argument against that was, or the hash rate of Bitcoin centralized. His argument against that was that all other sovereign states, if they see China ramping up mining and controlling it centrally from the government, will also feel like, oh shit, I better be doing this too. So Anyway,
Yeah, and we have the biggest Bitcoin mining industries in the world are here now.
now,
So yeah, I don't see them going back to China, and I don't see that happening until after they issue their central bank coin, because that's the whole premise. That's why they basically have banned everything. But even when it was illegal mining, I mean, the biggest Bitcoin miners were still in Beijing,
right.
and there was a cash window for the Politburo people to come in and buy Bitcoin, and that's why they survived. So it was more about banning it for the people, not for the Communist Party elites. So I
think his point is valid though. Like, what else can they do? Like, China cannot get themselves out of the trap of the West controlling their money and being able to restrict what they're capable of doing unless they find a way to have enough gold and Bitcoin to get rid of the reserves that are held elsewhere. Right.
Yeah.
So, and I don't see anything else they could do. Like, there's no other option to unload the USD and the euro. And I think that's a valid point.
No, that's a valid point. And so if they're holding T-bills, then, we make the interest payments to them, but also with inflation, that's just getting smaller and smaller.
Right.
We're basically paying back from when those bills were issued. I think right after the Great Recession, they were at like very, very low coupon rates, and they've refinanced a couple of times. So the interest streams are small, but when you look at what's inflation been over the last 10 years total, I mean, it's probably been 40% maybe over 10 years, 25. I don't know. I think it was like 8 last year. So it's probably 30%. So, that $1 trillion is really now 700 billion.
Right.
So, they are kind of screwed. It reminds me of a thing in Argentina with the Brits back maybe World War II timeframe, or right before or right after, when the Brits had built all the railways in Argentina, and the Argentines nationalized the railways. And then, of course, they made the colossal fuck up that they forgot all their foreign currency reserves in gold were in London banks. And so then London was like, oh, yeah, okay, well, we're just going to deduct it from your reserves. And, they just said the price is X and we're deducting X. So,
right.
Somebody's got to hold everything for you. And I was really surprised at the whole, Russian foreign currency reserves thing. But, I was actually pretty amazed, too, because I was like, I didn't even really think of that. But, look, it just basically gutted them. So now the Russians and Chinese are like, basically, they pulled all their drones out of Ukraine and Russia. They won't sell to them anymore because they were supposedly only supposed to be used for civilian applications.
And Russia's desperate because now they're shutting off gas to Europe. Right.
Yeah. And they're taking hits in Russia, missile strikes.
Yeah. But think about this. If you're shutting off gas to Russia, to Germany, whomever, you're so desperate in your current situation that you have admitted that the pressure on those countries is more important than the devastating loss of revenue that they're suffering elsewhere, right? They're now saying I really think they're at that like massively desperate point in Russia, because now you're cutting off the flow of cash that's sustaining your country, right? That's the only money you have coming in. And now you've cut that off. That tells me that you're just at a really seriously desperate place for where you are with the war. Hold on 1 second for me, Joe. I got to snag this real quick.
Go ahead. Yeah, I'll just talk. But, the thing that's interesting is if you look at like the fires and explosions that have been going on in Russia, 3 or 4 fuel depots have blown up, within 100 miles of the Ukrainian border. Ukrainian drones have been shot down 200 miles in or 100 miles in. And then the most interesting thing I thought was north of Moscow and northeast of Moscow, 2 big defense research facilities burned to the ground. So, nobody's claiming it, of course, because, and Putin's certainly not saying anything, because how does he justify that people are hitting his facilities around Moscow? Got to be getting pissed off and scared. So you cut the gas off. And then that's the message to Germany, because Germany is sending in those anti-aircraft tanks, which is, we're going to cut you off next. And so Germany comes out, I think today, and says, oh, we're fine if you cut us off. We can last till the winter, through the rest of this year. Go ahead, cut us off. And so, so the Russians are like, because what they've already, I think, Didn't they cut off one of the two, oil or gas? I can't remember. Maybe it was probably oil imports into Europe as well as here. But now Europe can just say, okay, cut the gas off. We don't care. And you're right. There's no more foreign currency reserves coming in. And two, they don't have any.
I think Europe cares if they have no gas because they can't manufacture shit. I mean, that's one of the points.
They're resupplying stuff. Like with Bulgaria, Greece is now sending liquid LNG over to Bulgaria to make up for that shortfall.
Okay.
The other ones, what was Poland, has already secured supplies in storage to last till I think a year from now.
Oh, nice.
So it doesn't really, it's a transition. Now I'm just surprised that the US companies aren't putting more LNG over there. But I read a report today or yesterday saying that they just don't want to ramp up production because US oil companies, because they think that the prices aren't going to stay high.
Right. Yeah. So they want to keep screwing us.
They want to keep extracting cash flow. So to me, I think, Russia's in this like tricky spot right now where ships are being sunk. They can't get any more ships into the Black Sea because Turkey won't let anybody in at all. So they can't replace that Moscow cruiser. They got like 20 running around in their subs and ships. They can't get to the Ukraine coast and hit it from the ships anymore because the Ukrainians have all the anti-ship missiles now.
Yeah.
Their own, plus, on a couple of those aid packages from.
Yeah, we just shipped a whole ton of other heavy armor.
Most of the howitzers and things like that for long range artillery dueling. But, Russians have supposedly lost like 22,000 troops.
Yep.
Lots
of generals.
Yeah, I think the general count is like 11 now.
Yeah.
And they're just throwing these drones up and looking for the signals.
Yeah.
Where's it all coming from? And they just go right in and take them out. So I think and then now Finland and Sweden are getting ready to join NATO.
Yeah. Well, I think
he's fucked.
So further to this, back to kind of crypto here is I think in this article, to me, this stood out as Arthur making the bull case for DeFi and a bear case for Bitcoin.
Oh,
now I'm sure some friends of mine that are listening to this will disagree. By the way, we had a nice big thank you from our buddy XBT from Material Indicators, Sean, for he said he was blushing yesterday when he listened, but it's so nice that he listens,
Yeah.
Somebody that's smart. It's well, so let's lavish some more praise on him. So he starts screaming at me to stop or something, anyway, we'll give out his Telegram handle. Everybody can tell him how much they respect him.
Or they can just go into your Material Indicators channel and read his speech and
meet the famous man, meet the brilliant genius of Bitcoin trading himself. So
yeah.
Anyway, so there's a section at the beginning that he called "Preach, Brother," and I'll just read this part to you, and then I'll tell you why I think he's actually making a bull case for Ethereum and DeFi, or maybe you can guess, Joe. Let's play a little game.
Okay.
So he says, why do the acolytes of Lord Satoshi preach the gospel with such passion? Because we know that in order to create self-sustaining pockets of economic action that use Bitcoin as the sole payment method, we must infect as many minds as possible with our mimetic narrative, which, makes you wonder about the toxicity. This is especially important because of how successful Bitcoin has been from a price appreciation standpoint. The meteoric rise of Bitcoin from nothing to a $1 trillion plus asset in the span of a decade created the HODL culture. HODLers will not sell their Bitcoin at any price. And these folks, myself included, spend fiat and save Bitcoin. Fiat depreciates in real terms year after year, while Bitcoin is the best performing asset ever created. Then he says, however, Bitcoin, unlike gold, must be used to have value. Miners spend energy to maintain the Bitcoin network. To cover their costs, miners must receive payment in a token that is socially valuable. Bitcoin, therefore, must move, and movement between parties is the antithesis of HODL culture. Anyway, HODL culture taken to its maximum would result in the complete destruction of Bitcoin. Once all Bitcoin has been minted and miners no longer receive sufficient income from network rewards in the form of newly minted Bitcoin, they must rely on transaction fees instead. If no Bitcoin changes hands because we all sit smugly clutching our USB sticks, there will be no hash power supporting the network, no value. So he says, and therefore, as a loyal subject of Lord Satoshi, I must do my part to evangelize the good word, and hopefully they can influence their domestic policymakers to create a fertile environment that promotes a farm-to-table Bitcoin economy. So the entire premise of this piece that he wrote is, let's get out there and get every sovereign nation to start buying Bitcoin so that it becomes parts of their economies, and then people are spending it, so there are transaction fees, so the network stays secure, right? My argument is this. If he truly believes that, it must be used to have value, why would you depend on one that has so little capability for use, right? The simplest, you already have a culture. If I'm investing in something, right, and I think, okay, I see on the horizon what what Arthur is saying is true. And when the last Bitcoins start to be mined, I don't even think it makes a difference when you get to the last. It's before it gets to the last, because there won't be enough money being made from mining, because there'll be so few and far between. But when the last Bitcoin is created, the fact is that if people are not spending Bitcoin, if they're not utilizing it in transactions, then it loses its value and it collapses, because there's no way to secure the network anymore. And that's a valid point. Whereas you have Ethereum, Phantom, Avalanche, Solana, all of these networks who are being used, right? Where there is value, where there is liquidity, where there is activity. So why, if I'm a sovereign country and I see that the trajectories are incredibly similar for Ethereum as they are for Bitcoin, and that Ethereum has a use case, and Ethereum has a plan for moving to proof of stake, and I can make 4% to 17% interest on my Ethereum every year if I secure the network by staking, why would I buy Bitcoin? Right? I mean, the only reason you buy Bitcoin is because your current perception is that Bitcoin will be the leader and will grow forward. And I'm not saying that's not going to happen. But if you're making a long-term play, wouldn't it make more sense to make the play in the networks that are actually being used, right? As opposed to Bitcoin, which is being held. So I think he was actually, to me, making a bull case for smart contract based blockchains. Sorry, Sean.
Yeah, I would love to hear his perspective on the hodl thing.
I would
all
love
the
to
way
get
to
him.
The end. Yeah,
I would love to get him on the show, because we've had him on Material Indicators recordings where we talk about the market and stuff, and he's phenomenal, but just fantastic. I really would love to get him on to talk and do analysis like once a week or something, because he's a great guy.
When is the last one forecast to be mined? Like 2045 or something?
It's way out. I don't
2080.
I can't. Hold on, let me see.
Because what I'm thinking is that I think it's going to be. I mean, I don't actually believe in his hodl premise that everybody's going to hold
2140.
Okay, so yeah, forever. Way beyond our lifespan. So
speak for yourself.
I think use. Yeah, I'm only going for 120 myself. So at that point, I'm throwing in the towel.
The tech is here, man.
Let's do it. If it just doesn't, I just can't get bored. If it gets boring, then I'm out. But I think people use it.
Joe on his live vlog at 112 pulls out a gun, his laser.
Yeah. No, I do it. I wouldn't want to leave a mess for everybody,
Yeah, well, the laser just burns you into dust. It'll be
cool.
good.
No, I bet get me on one of these rocket ships, and send me off into space. I'd rather do that. But I think it's going to be used more. I think they're going to figure out a lot of the stuff, and it's going to have a lot more use cases. Maybe people aren't spending it. Yeah, Bitcoin. At least between now and 2140.
Right.
But and maybe all the DeFi plays that we talk about, the new ones on Bitcoin. Of course,
stacks. Look, there's a lot of opportunity there. But if the main hodlers are these absolutist maximalists, does it ever happen? Right? Do you have enough in that network to compete with the massive amount of money that's in the smart contract chains? And how do you make them? Yeah. I mean, look, at the end of the day, Stacks is Ethereum on Bitcoin. It's not literally, but it's a layer, right? And it's the same concept as layer twos and everything else that are happening on Ethereum. So if the maximalists say, fuck it, we're not getting into this because you guys aren't pure Bitcoin, and all Bitcoin is just something that sits there and stores value. Do people say, well, fuck it, I'm making a longer term investment. I'm going to be where the activity's happening, where liquidity is happening.
Well,
right?
Yeah. And look at what's going on with Europe. We talked about this a little bit the other day, where they're talking about, again, banning proof of work coins because of the environmental issues, and they're throwing in behind Ethereum. And they're talking about, this article right here, target the Bitcoin price. So, talking about how the EU could crack down on Bitcoin and protect Ethereum. So I don't know, I guess. And also the other thing I would say is, if JP Morgan, Morgan Stanley and everybody are buying Bitcoin now at 30-ish, 40-ish, when it gets to 900,000 a coin, you don't think they're already out? I mean, those guys aren't hodlers. I'm sorry. They're traders, man.
Right.
They're going to trade out of that. And so, and I kind of think a lot of other people, I don't know how, I'd love to know how many of the original, there's some software out there talking about the aged wallets and stuff like that. I'd really like to see how many, the age of most of the buys in people's wallets. I'm thinking it's more recent than old. So a lot of people, I think, have been getting in over the last year or so, and much higher price points than say what it was in 2018.
Sure.
So again, I think people will take. I mean, that's just human nature. But I don't know if there's enough in the retail hodler thing to really lock it all up, I guess.
Yeah.
But all your points make sense.
I think I look, at the end of the day, I think Bitcoin still leads the way in institutional investing for the initial time being. But I think there's a case to be made, and I think I think you talked about an article a few weeks ago where institutional investors are just waiting for version 2.0 of Ethereum. And when the merge completes, that's when they load in. And
that's true. Yes.
And I don't think Lightning scales fast enough, and Stacks and the other Bitcoin-based DeFi protocols scale fast enough to be overcome if a massive wave of institutional money comes into Ethereum and Avalanche. And look, Ethereum is the gateway drug to smart contract investing, right? And to all of the tools. Here's the other thing. If you're an institutional player and you've got Bitcoin here, so let's say you take 25% of your money. I'm always going to put it in Bitcoin. It's the granddaddy. It's
the bond. It's a bond.
It's the thing. Yeah. Right. But when you look over here and you think, well, holy shit, this is everything I do every day plus more. And it's the freedom for whales, family offices, and potentially institutional, once the custody issue is dealt with, for them to actually play in all of these financial products that they're used to, right? Just easier, more easily. To me, it's hard to make a case that a majority of institutional money ends up in Bitcoin. It could. Yeah. I don't live in that world, so I can't say that, but
But I would say one other thing is that, okay, maybe it does, but then they're going to go park that at Aave or somewhere and borrow on 85% of the value and stake it in a bunch of Ethereum-based DeFi.
Right.
I mean, so
that's true.
That might that kind of adds more to your argument. So you buy it to hold it, and then you borrow against it and you trade there.
Right.
That could be interesting. But also, you're right. They're just waiting on this merge to happen to make sure it doesn't, because this has been going on for 5 years, so to speak. So they want to make sure this happens, and then they're going to come piling in. And it's just a matter of time. I mean, when you see all these yields on essentially blue chip assets, let's say, ETH and BTC and stable coins, why wouldn't you be doing more there? If you're parking $1 billion in crypto, put it in BTC and then borrow against it. And you got 850 million to play with stable coins, and go get 16% on that. It sure would help out, like our buddy, I don't want to say his name, but who ran all the big bond portfolios for BlackRock. And now he's at another group, which actually we need to talk to him, because he moved on from that one he was with, and now he's in one specifically talking about crypto. So awesome. But anyhow,
hey, we had a couple of comments. Chuck said, there's only about 50,000 tons of easily extracted gold left on Earth. Given that we use about 10% of that a year for electronics, exclusive of recycling, China isn't going to get to use gold. And then Niblet says, gold is the ultimate proof of work token. By ultimate, I mean costliest. I think gold and diamonds are up there for the cost to human life and to everything for actually getting it. But yeah, absolutely.
Yeah. Well, look, that's another one of my favorite market sectors. I mean, who doesn't like this one? Asteroid mining. You know, I mean, Consensus, remember they bought that one, like Planetary Resources, I think. There was two big players. They bought one of them. And back in 2018-ish, I think.
Yep.
And, if you're looking at, and there was even somebody talking about doing Bitcoin mining on asteroids or something like that and using it for, some way you could solar or whatever to run mining rigs on asteroids. And, I mean, all kinds of crazy shit. But the point is that, there's a finite supply of gold on this planet, but it all came from other stars and stuff like that in the Big Bang. I mean, that's what all this shit is. So it's everywhere in the universe.
Yeah. So speaking of Ethereum staking, there's a new competitor launching, Swell. And here's the interesting thing that they're doing. So normally you would stake at Lido or Lido, whatever it is, or you would stake at Rocket Pool. And then you can take those tokens and there's all kinds of other investment opportunities. You can borrow against it. You can stake it in a vault, whatever, right? And earn additional yield on it. They're actually bringing the yield of the vaults into their platform. So they're not launched yet. By the way, the address is swellnetwork.io. So they haven't launched yet, but initial staking is coming in at 5%. So higher than the other two by about, 0.5, 0.4, 0.6, somewhere in there percent, but they're building the vault into their app. So you can actually stake and move straight into a vault and earn 7%, which to me is a smart play for the guys that come in later, because then post merge, they're going to offer 17% plus on staking and vault plays. Now, and this is a decentralized offering like Rocket Pool. It's not like Lido where everything is centrally controlled by a group, although Lido's working hard to decentralize. So I want to be fair. But this is the other thing that kind of struck me is look at this investor list. Mark Cuban, Ryan Sean Adams from Bankless, David Hoffman from Bankless, Kane Warwick from Synthetics, all the Synthetics guys, the Balancer guys, the Ren protocol people. I mean, these are some pretty hardcore names and people who have built some hardcore protocols. So it gives me a lot of trust in this project. So I'm asking for when and I'm probably going to have an interview with these folks, but I'm definitely getting in their Discord to keep up to date on when they're launching it. So
yeah, that looks really cool.
Yeah, so it's an awesome move. I think it's a play that if it can prove it through audits and security that it's stable and secure, that actually can attract the institutionals, because the institutionals would rather do everything in one place, I think, right? So
go ahead. I'm sorry. No, I was going to ask a lot of times when we stake stuff, we're depositing it into the protocol to get yield. That would be custodial, right?
This is proof of stake staking on Ethereum.
So this is basically just running it out of your wallet?
Running it, well, yeah. I mean, you're running it through their dApp and your wallet's connected to the dApp, just like when you're staking in another protocol, but they then pool all the Ethereum that's staked to make a node, right? So they have to have 32 Ethereum per node. So it's a decentralized method. It's just how Lido and Rocket do it too. It's a way to combine and pool Ethereum together into a node. And then those nodes are run by this protocol, this algorithm that handles them and keeps them staked on the Ethereum network, right? So you could come in with 5 Ethereum, you'll get pulled together with other people that have 27 Ethereum. Then you have the minimum necessary, and a node is formed, and you start earning your interest on the Ethereum you're staking.
So it's non-custodial for everyone, both
I mean,
the individual.
Yeah, I mean, you're staking it, so it is somewhat custodial by them, but
regulatory
you can extract it when you want, right? You're not handing it over.
Yeah.
And that's the other difference with these products like Rocket and Swell is if you stake directly in the Ethereum mainnet, there are locks, right? You have to stay in there. You have to behave. You can be penalized or slashed for screwing up. If something happens wrong with your software, your system, this is a much safer way to be a part of the staking of and securing Ethereum. So, hey, I want XBT had a comment back to us. He said, other than the centralization factor, the key differential why BTC wins in the long term is because of its unchanged monetary policy. And I spend BTC every day, and everything I spend is BTC. Awesome. So that's a hodler that spends. So he's not a hodler, but he is a spender, but he is a hodler. He's a collector. He's a collector.
Well, he has this big stack that he hodls and he trades around it, shorts and longs. So I think probably make some money there to spend.
I think he could probably like buy and sell Arthur Hayes. I mean, I think
Oh yeah,
he's
yeah. No, I mean, I
he's
think,
Lord of Bitcoin.
Yeah, that's what I was going to say
Lord
too.
of Bitcoin. But that's a look, fairness, valid policy, right? Look, Ethereum's policies around around inflation and deflationary policies around how many exist, that is a legitimate critique of Ethereum. That is a legitimate critique of it. And his point is valid in that if institutional investors are looking at it and they factor those into their thinking, the Bitcoin policy cannot change, right? It will never change. The only thing that I can imagine changing is that, somebody panics and decides it needs a proof of stake mechanism. I can't imagine that happening. I think anybody that even proposed it would probably be mowed down in the street. But but he's right about that. I mean, that's an absolute fair statement. I still think my argument stands, and I still think that it'll end up being more attractive to have things that are being used. But I'm glad Sean is putting his money, his Bitcoin where his mouth is, and actually engaging in the value of Bitcoin by spending it, which is awesome.
So, think about it. So he's doing that, and a lot of other people are doing it. I don't see that slowing down. To counter Arthur Hayes's point in the 2140 that everybody's going to be a hodler and nobody's going to spend it. I just don't see.
Yeah, but how do you look? At the end of the day, the monetary value, the growth in value of that protocol means that a majority of people are never going to spend it.
But it's only going to be a 20x over the next, next 120 years. I mean, shit, we do 20x's in a week, other stuff. So,
right.
If you're talking about from 40,000 to $1 million, it's a little over 20, but 23x or something, over 120 years. I don't think
he's saying $1 million in 120 years. I think he's saying $1 million in the nearer future.
So
I think he's saying
10 million,
and then I don't know. Where does it go to? Who knows? I mean, look, the value of Bitcoin is its limited supply, right? I mean, that is one of the primary things. So, I'm
not going against what you're saying. I'm not.
Yeah, I don't think $1 million Bitcoin is far fetched. I really don't. I think that's absolutely doable, and I think your point is valid that it's only 20x. But if you're an institutional player, and you can invest today, and within 5 years.
If it's 5 years,
that Bitcoin's worth $1 million each. That's a sweet.
Well, I'll take that. Yes.
Return. Yeah.
I'm just kind of going against his argument about that everybody's just going to be hodling, and then the mining network shuts down.
Well, look, I don't know if that'll happen. I mean, that's a long fucking time from now. But I do think that I think that the reason Bitcoin has been so successful is the hodl culture. Right. That has driven it up because people don't sell it. But the other side of that is there's the downside of that eventually, because more people need to be like XBT and spend it.
Yeah.
And I think a majority of folks don't. You know what? The other day, my wife and son and daughter were sitting at the kitchen table. It was the day that the day Satoshi walked away from Bitcoin Talk, the forum, right? And I think that day, his wallet was worth, I want to say 35 billion, but it may have been 53 billion. And I went in and said, on this day, 11 years ago, a man or a group of people who created
or a woman
who created Bitcoin, posted their last post about Bitcoin, walked away and never touched their wallets again, and have never touched in 11 years, I'll say $35 billion worth of Bitcoin. My son was like, he's fucking dead. He's like, there is nobody. I don't care how religious they are about Bitcoin. There is nobody that doesn't touch that. And it's a hard argument it's hard to argue against.
Well, human interest. Yeah. You got to think they would touch a little bit of it, but
yeah, it was unanimous at our house that I guess Satoshi died that day or shortly thereafter.
It's interesting though, what Arthur Hayes' point about, he doesn't spend Bitcoin, he spends fiat. I mean, I could make an argument, then why aren't you buying more Bitcoin with that fiat?
Well, he has to pay his bills.
Well, no, but I mean, so he's, his fiat, he's getting it from somewhere else. He's not selling Bitcoin to get it. So it's paychecks, I guess, or some payroll or something from somewhere,
Right.
some payments from somebody in fiat. And so my thinking was, we don't know how much that is, but, shouldn't you be then plowing all that money into BTC and then, keeping what you need to spend?
Well, yeah, and I don't
I was
understand why
surprised he didn't
anybody
say,
that's a hodler doesn't just borrow against their Bitcoin.
yeah, I mean, I don't, but I all the points make sense. I believe it's potentially $1 million asset.
Yeah.
I believe it's the pristine one of everyone that because of the proof of work protocols. But does that hold up forever? Is the environmental stuff actually real? The issues there, does it get worse? I mean, I don't know. Does it get better with all green? There's so many things out there, and I'm just really poking holes at just his argument about 2140. There's not going to be any mining. That's it. But I think it's part of any portfolio. I'm not an absolutist. I'm more into the DeFi side. But look, if you could, why not? I mean, when you invest in equities, you also invest in bonds.
Yeah.
It's risk reward or, whatever your risk tolerance is.
Sure,
but right now, I like to go for wins.
Yep.
But, if I was sitting on 35 billion, yeah, I'd probably be a little more conservative at that point.
So yesterday afternoon, I interviewed the founder of Fei Protocol, one of the first algorithmic stablecoins that's lasted a year. And it feels like Fei's been around for 2. And he had a colossal fuck up at launch, had a $1.3 billion raise, like 1.3 billion, not
nice.
Raise that went into the coffers of the project, people buying Fei in order to get the token Tribe that is their governance token. But 1.3 billion in sales on the launch, right? But there was some fuck ups. And anyway, talk to him about kind of the lessons he learned going through that, what his recommendations are to founders. But dude, we got into, you and I talked about the merger of Fei and Rari. Rari is a lending protocol. Fei is a stablecoin, which, just logically you think, oh, well, that makes sense that they would work together. Lending, stablecoins usually are backed by lending, right? So it makes sense that those would be compatible projects. The shit these guys have built and launched, and that is coming next from this merger of these guys, and they're vocally saying that they believe it's time for the protocols in DeFi to start shrinking and that more mergers will happen. Some really, really fascinating shit. So that episode's going to hit on Monday. I was really impressed with this guy and really blown away by what he and Rari are building as a merged DAO now. Just some really rock star level shit. It's absolutely unbelievable, the mechanics of what they're building and how it works together. So I'll just leave it at that. Everybody can listen to the episode on Monday, but this, I've kind of had, I've done a little bit of borrowing and playing with Rari. I'd never messed with Fei at all. Now I'm going to be paying a much closer attention to both of them because what's coming out of there is pretty amazing.
What is it? I mean, not to steal the thunder from the show, but
well, yeah, there you go. I knew you were going to do this. You're going to make me like talk through.
No, I just want to know what was because I don't remember this one very well. What's the underlying? I mean, what's the value prop around Fei and Tribe combined? Is it just the vaulting and is Fei a stable coin or what?
Fei is an algorithmic stable coin.
Okay.
And has some interesting mechanisms that I made him walk through so people could understand how it functions for the show. I made him do a real high level. Hey, explain to why Fei is important and how it functions.
No, I'll wait for the show. Yeah. That sounds cool.
But the tools that they're rolling out that tie into this are, to me, going to be huge institutional draws, but also really powerful. Just absolutely. I mean, I'll give you this one piece of it. They're launching a product, a platform that anybody that wants to launch a token can launch a token and immediately have protocol-owned liquidity on launch built into how their lending and stablecoin protocols function together. It's really amazing.
Wait, so you're launching a token and then immediately you have sort of liquidity pools all
their
set
system,
up? Wow.
This new system that they've built, it integrated with a system they launched called Turbo, will allow projects to come in, launch, and immediately have liquidity, owned liquidity, not somebody else's liquidity, project owned liquidity in their system out of the gate, like immediately.
I wonder who could use that.
I'm always thinking, Joe.
Yeah,
Anyway,
I could see that. That's what I'm connecting the dots on too, right there.
Yeah.
I'm like, all right,
fascinating project, really great guy. I want to do a show with him and the, we talked about, the guys that launched Rari, they were in high school when they launched it. Right. And
wow.
Yeah. And they're now 17, 18, 19 years old. I think May 1's 20. But he's the CEO of the DAO, whatever the company. Oh, something else. A really brilliant model for DAO governance that they've instituted, which they call negative consent, which they currently have the standard governance model of everybody voting on fucking everything, but they've started merging in this negative consent model. So the theory is this, and it's valid. I mean, we've talked through this with a number of guests. The theory is that at the end of the day, to move fast, to be able to be innovative, there have to be people in charge, right? There have to be people that are saying, here's what we're going to do, and we're going to just do it. But the negative consent model is the team that leads the way says, I've got this, this, and this, and this, these 4 things that we're going to be doing in this quarter, right? Here's what we're going to launch. Here's what we're going to do, whatever it is. The negative consent model is he doesn't have to get approval for that. But if the community doesn't like something, the community can propose to kill one of those items. So it's like a community veto. Yeah, it's a community veto model, which to me is a much smarter model when you have an innovative, headstrong founder, right? Or founders that are already proven that they know what they're doing, like the guys at Faye and Rari. Why not let them run with what they're smart? Sam Kazemian, this would be perfect for Sam Kazemian's governance at Frax. I don't know what their governance model is like, but to me, that's a really smart structure. It's like, let's make sure that the founders can get done what they need to get done. But if we don't like something, we can step in and say, no, don't go there. Right?
Yeah. So, at a majority threshold, I presume. Right?
Exactly.
No, I love that because then you can just execute.
Yeah.
And if you're doing something stupid, then the users, which like the board of directors, they stop it.
Exactly.
Like, haven't you thought about this? Instead of like having to get every single thing approved.
Yep.
And
having to get everybody in the community together just to get a fucking quorum to get shit approved.
Yeah.
Right? I mean, so to me, that's a really fascinating model. We talked a lot about DAO governance, what they've thought about, what they're doing. And then we also talked about 4626, ERC 4626, which is absolutely powerful and absolutely has some value to us, Joe. So anyway.
Yeah.
Dude, I was worried we didn't have shit to talk about today. Well, I don't think that's ever possible with you and I. We may be boring the fuck out of everybody that's listening, but we will never not have something to talk about.
Well, that's the gift of gab, right? Plus, I kind of throttled back on reading 60,000 Telegram posts a day. I'm exaggerating, 4,000, because it was just too much. Now it's like I just find 2 or 3 things that look interesting whenever I'm scrolling through and just feed them into the saved messages folder and load those up. And that way you don't, there's always something there to talk about. And, look, the stuff we talk about, there's so many different layers to it that, you can just riff on it and basically go in a bazillion different directions.
I think the problem we have is we're not fighting enough anymore.
Yeah, I don't like it. I don't like that. I don't like arguing with people because it just gets me too stressed out.
I know, but I think that's what sells, dude.
Well, all right. Well, maybe we need to get in the same room on the same screen, and then we'll start arguing. No, I don't think I haven't.
We can argue about whether arguing is good.
Yeah, no, I think it's. There's so many perspectives out there. I mean, what do we always preach? Instead, listen to like 20 different people talking about stuff and form your own opinions. Yeah. Nobody's 100% right. So we try to explore the nuances of all those opinions and just give our 2 cents, some premeditated, some on the fly. And it doesn't mean we're right. It just means it's an opinion. But, I think discourse leads to, other people connecting dots with their information sources and thinking, oh, yeah, I didn't think of it like that. Yeah. Or they comment on something and say, hey, this and this. So I think that is more, the only thing we ever really argued about was, you know, how
Regulatory
much to
issues.
trash regulators. Where my philosophy is just, you know, it's like a bullfight.
Let's not go there again. Let's
Don't
leave this
wave
one
the
alone.
red cape. You know, it's like, so do your best, but you know, everybody fucks up. And so that's it. You know,
all right, folks, go ahead.
Yeah, gotta go. So it's
yeah,
like 105.
Love y'all. Thank you for listening and watching. We appreciate it. Please rate, review us on Apple Podcasts and on YouTube. Give us a thumbs up. Make sure you're subscribed and you tick the little bell on YouTube so you don't miss out. But we do appreciate you watching. Again, if you have any projects we should be looking at, any guests you think we should talk to, anything else you think is important, or you just want to tell us to fuck off, you can message me at B05Crypto on Telegram and Twitter, and B05Crypto #2143 on Discord. The fuck off messages, though, go to Joe, and I'll post his Telegram handle.
Yeah, it's
shortly.
called Pound Sand. No,
have a great afternoon, buddy.
Thanks, Niblets. Thanks, XBT.
Yeah, thanks, Chuck, everybody. We love y'all. Take care.
All right, man. Talk to you later, bro.